Good evening and welcome to the Accendo Traders Group. This is our daily stock market wrap-up for Monday, December 28th, 2009. Our website is blog.accendotrader.com, where we put together effective video technical analysis trading plans on a daily basis. This trading plan helps us stay abreast of what's coming on the market that can affect our positions, keep us focused and disciplined, so as we're scanning for new trades, we can be prepared to set our alerts. But more importantly, by cutting down on our research time, we're able to spend time with our family. So, the day that was. Certainly was an interesting day. It was painful, but it was certainly interesting. The dollar once again is pulling back against foreign currencies, and the fact that the overseas markets were posting solid gains throughout the day is why the market basically opened up, and we kind of went down a little bit and rallied into the close. We had some weakness in the financial sector, which there was a 2 o'clock-ish push down, small push down, and that kind of led to that. Once again, our lighter volume continues as we are in this 2-week holiday trading period. Last week we talked about 800 million. Now we're only down to 700 million, which is basically half of the normal 1.4 billion shares traded. Another good news for today was that MasterCard reported that the holiday shopping year over year is up 3.6. A lot of that actually came from internet retailers, specifically Amazon. And 8 of our 10 sectors were in the positive territory. We already talked about the fact that the financial sector was weak, so they're one of the ones that ended down. Also industrials. And although you see we're up 26 on the Dow, but a lot of that had to do with the last 15 minutes or so rally into the close. Nothing on our earnings front. We did have an upgrade as far as the target upgrade for Apple. There's a lot of talk going on at Apple about whether or not they're going to reveal the new tablet, the new reader that's going to take out the Kindle and sort of a tablet netbook. There's a conference in January to talk about that. So Apple was upgraded today. Tomorrow we have some economic news. We have the Case-Shiller City report, so some housing data, and we have consumer confidence. So that certainly has potential to move the market. Let's go ahead and take a look at our overview. So as we look at the overview of the day, you can kind of see that we kind of pushed off of the open. Remember we talked about the overseas market and the data about the internet shopping and the holiday shopping. And the funny thing is, as we drifted lower, and that, as I mentioned, that last little push got us back up to where we were at the highs of the day. But when we take a look at our Rubik's Cube here, we can kind of see that we don't really see an all green. We see the reds and the green, and we can also see the weakness in JP Morgan. You know, this is all the financials down here. So that certainly leads to the fact that today was a blasé day. More stocks were advancing in decline, but look at this. Actually, it's pretty much a wash, split even. Still have stocks making new highs, still have stocks above the 20 moving average. And of course, when we look at our next screen, we'll see that the volume was down for today. So here we are. Yeah, you can see the volume increase, but obviously Thursday was a half day, doesn't count. But overall, we can see that the volume is still low. You can see that we are breaking above the 10,500 range, so certainly that should catch some interest, especially if we stay here next week when the traders come back. One interesting thing to take note of, if we pull over to the monthly chart here, this is something that the shadow trader Peter talked about. And first of all, look how close we are to retracing this huge candle here. We're almost there, and this is really a big push down happened. Yes, we can talk about the rest of this, but this was the kablooey. Obviously, you can see that we're still above the 50 moving average for December. We are above the range here, and also we take the time here to draw a little retracement. Whoops. Let's try that one more time. Just showing a Fibonacci retracement for those of you who are into that. And you can see that we are above 50% retracement of the October highs of 2007. And so that puts us towards a 61.2%, 0.5% retracement up here. some of you also recall that we also talked about, let me get rid of that. We also looked at the swing highs over here as a potential target level also, which is about the same place as that 61% retracement level. Switching over to the NASDAQ. We can see that we have already retraced the big candle, going on to the next candle, and we talked about 2300 being our target, and we're well on our way to there. So if we break this level here of 2300, if we break this level, I mean, we're up to the next one. So the NASDAQ is certainly, and the other thing that's real important to point out is that if you look at the volume, if you take a look at the volume, it's not as bad. The Dow and the S&P are horrible volume, but the NASDAQ's not really that bad. Does the Apple move have to do with that? Maybe. Not even going to look at the daily for the NASDAQ, but we know that the daily chart is up and away. And here we are on the S&P 500 trying to hit up here to the 50 moving average. I do want to point out one new thing that we're going to be doing for 2010. Most of you know that I started off with stocks and options, and even though I'm really focusing as far as investing for myself on futures on a day-to-day basis, I still have several investments in stocks. And so what I'm doing is on Facebook, and my name is Michael Glass. That's where I have all my Accendo Trader stuff as myself, Michael Glass on Facebook. And they have the Kaching Investing IQ app. And what I'm going to be doing is if you want to follow me, view my portfolio here, also updates on Twitter for 2010 on what I'm investing, start off with X amount of dollars. And one of the cool things about Kaching is if they have what are called geniuses here, find a genius. You click on that, you find people, you can see how well they're doing for the year, and then you can open that account and have it traded exactly like that genius. It's a pretty cool app, pretty cool website, Kaching. So that's one of the new things we'll be doing for 2010. So for our stock folks, check me out, see what we're investing, and as I said, if you like the strategies, you can open an account and they'll trade it exactly like the genius of your choice. So as we end our video with the education portion of our video, we kind of cut out a couple things since the market is like volume, and there's not a lot of trading patterns. It's just really you're just trading whims. As I said it before, and I'll say it again, just don't trade. Trade on a simulator. Take some time to research and educate yourselves on a couple things, but I'm not sure if you really should be putting cash in the market this week. So let's go back to what we talked about yesterday, and that is that the market is a series of opportunities, upticks and downticks that form patterns, and those patterns usually represent an edge that we've defined according to our trading plan. And so every time these patterns begin to form, it's presenting us an opportunity to get in. Maybe the pattern is saying to get out of a trade or to cut our losses or whatever it is. Patterns are forming based upon these upticks and downticks. But what stops us from enacting upon what we see? And typically, it's not the market, because again, the market's just data. It has nothing against you. Believe me. Say it with me. The market's not out to get me. So what really is it's our fears. It's our fear of losing, our fear of being wrong, our fear of failure. And as we've been talking about for the past month, is that our job as traders is to set up a system that has edges, that has patterns defined by our system, that puts us in the probability of winning. We're not going to win every time, but we can set ourselves up to be in the probability of winning the majority of the time if we follow our system consistently and don't follow our emotions. Believe it or not, today once again we had some positive trades today in the room. For those people who want to do that, our e-mini broker, as low as $300, 20 free contracts if you trade with them, and our futures trading plan to help you jumpstart your trading career. We do have a video on our YouTube site about getting started with futures, and I'm going to be adding more this weekend, specifically about a futures financial plan and about a futures toolbox. Thanks, guys. Trade at your own risk. I'll see you next time.